In Venezuela, the value of cars does not decrease over time. You purchase a car today, use it for 5 years, and can still sell it for the same price you originally paid. Banks offer loans for plastic surgery, taxi drivers earn higher salaries than doctors, supermarkets are equipped with fingerprint scanners, and some find it cheaper to live year-round in luxury hotels than rent an apartment. In 2015, the country with the largest proven oil reserves on Earth, enough to meet all of America's demand for 40 years, ran out of toilet paper, and hotels even asked guests to bring their own. Along with shortages of rice, sugar, milk, and shampoo, on top of rolling blackouts, 30 million people struggled to survive without the most basic of basic goods. Venezuela, once the richest country in Latin America, was experiencing the worst economic crisis in modern history. Since then, 7 million people, a quarter of the entire population, have fled the country, and all this is happening in a country with 300 billion barrels of oil. That's 11 times more than China and nearly 4 times that of Russia. So, how did Venezuela go so terribly wrong? In 2013, 96% of Venezuelan exports were related to petroleum. Strong oil prices not only bring in loads of cash, but they also make foreign goods much cheaper. In 1970, Venezuela had a higher per capita GDP than either Spain or Greece, and nearly 60% of the population was middle class. The country even began importing doctors, but with such high highs come extraordinarily lows. Politicians often prioritize providing immediate benefits rather than setting aside resources for future needs. This made the government vulnerable to financial difficulties during difficult times. Remember, when oil prices fall, the state loses both revenue and the imports they depend on become more expensive. This pattern of boom and burst persisted in the oil industry for over a century. The current crisis is due to a combination of low oil prices and US sanctions imposed after its president manipulated elections. So what was the government's solution? Print more money. Since 2007, the Central Bank of Venezuela is no longer independent and has been giving politicians direct control of the money supply. This led to inflation. At first, the government simply pretended it wasn't happening by refusing to release the data. And by the time it finally gave up pretending in 2019, inflation was at 130,000%. While taxi drivers can easily raise their rates to adjust for inflation, the salaries of professionals were reduced to nothing. When they ran out of cash, people simply took out loans to buy everything from TVs to plastic surgery, so the government took another major decision which they thought would solve the issue. After all, if prices are too high, why not just impose a limit? In a sense, it works. State-run supermarkets are ridiculously cheap. The prices are set well below market rates, and shoppers are incentivized to buy as much as they can. Anything unsold can easily be resold for twice its price in the black market. It's estimated that up to 14% of Venezuela's highly subsidized gas is smuggled internationally. In 2015, lines outside grocery stores got so long that everyone was assigned one day of the week for shopping based on the last digit of their national ID. To prevent the same person from using their quota at multiple stores, fingerprint scanners were installed at checkouts. In Venezuela, there is no fixed exchange rate. The value of your money depends on who you are. Once again, the government had a solution. To encourage companies to import essential goods, it offered a special favorable exchange rate. That's a problem because until recently, the government carefully restricted access to foreign currency. Unlike most countries, you couldn't just walk down to your neighborhood currency exchange and trade some cash. Due to this, few new cars entered the country, and also the exchange rate offered by the government wasn't the real value of the boulevard, meaning the government might give you $1 for 5 boulevards, but nobody else would give you $1 for anything less than 50. This also opened the door to a different, more sophisticated form of arbitrage. You might ask the government for permission to exchange 5 million bolivars for $1 million to help ease the goods, import only 500 worth of goods, and sell the remaining 500 on the black market for a profit. And just like that, you've created money out of thin air. According to the government, people are the reason the system is broken. The crisis could have been avoided if only people bought from stores what they needed, stopped exchanging foreign currency, and saved and invested rather than spending everything they have. Years of inadequate governance in Venezuela have caused its citizens to lose confidence in the government's ability to make positive changes, and the only goal left is to strive for personal success.